Good morning, good afternoon, good evening, wherever you are. Thank you for joining us for today's public webinar. Good morning, Jim.
Good morning. We're going to do things a little bit differently this morning. Instead of commercials early on, I'll do just a very brief commercial early on. But then for those that have an interest at the end of the program, they will stay and general answer any questions that you have. The two programs we got coming up, we have the primer that starts tomorrow. The primer is for those that really want to get an idea of what we do. It's a low-cost program to give you an introduction to what we do. The senior course, the intensive, comes up in, I believe it's October, about 60 hours. And that course has a prerequisite to it, the foundational e-course. If you have an interest, stay around at the end, and Jen will go into details and answer any questions. All right, I want to start.
And I just wanted to say currently we have early bird pricing until Sunday, August 13th. Purchasing early will always yield you the best price. And we do have discounted bundles right now for those of you who have not done the foundation e-course but need to do that and would like to do the intensive. We do have a bundle that contains both, and you do get a nice discount for purchasing more than one course.
Okay, so this we selected August 1st for a public webinar because I had a feeling that this might be a pivotal time in the market. I mean, you never know that, but it's certainly starting off very interesting. The first thing that I want to talk about, you're looking at the daily bar chart. 11 out of the past 13 days, the low has been almost exactly on that on the trend line. I mean, I've never seen anything that exacting as long as I've been trading. Usually when you get this exactness, we talk about the dispersion model. Dispersion model is, I used to do the same thing, but Mark Gladwell came along and put it into a what he calls a dispersion model. And what it says is, let's say an auction starting from the low to the high. The first people in are the innovators. Next, the early adopters. Next, the early majority, late majority, and finally, the laggards. The laggards are, really they're those that have watched the market for years, months, and all of a sudden they decide it's going up. You can't, there's no way to prove that that's what's going on in this market. However, from my experience, when I see the exactness, when I say 11 out of 13 days exactly on the trend line, that is the behavior of laggards. All they're doing is looking for some mechanical place, to get in the market. Yesterday, this market came down, and it just unbelievably how hard it pushed on this level. This low, the trend line, as you extend this trend line, the trend line would be at 46.19 this morning. This is the first time. Jen, would you show your profiles for a second? And if you will show 46.19, so you will see that the market is opening below, well, we've got, a half an hour to go, 25 minutes, but it's opening well below the 46.19. That's the first time that has happened in 13 days. So that is an indication of change. The next thing we look at are yields. And there's been a trigger, a point, and that is when for short-term traders, when the 10-year has gone over 4%, all of a sudden the short-term traders have gotten nervous and done some short-term selling. We've got pressure in the yield market this morning. The Next thing I want, if Jen, if you will show your profiles. Oh, okay, and the chart with the profiles.
Oh, you're talking about the image?
The one I sent you.
Okay.
All right. So now what I did last night is I look at this as a 2-day balance. The biggest moves in the market come when a market trades out of balance. You see, we had the really big day where the market, started last Thursday, where we had all the, the volatility, and then the market back up back up and settled on Friday. So if I'm taking Friday and yesterday as a 2-day balance, we then are looking and saying the balance trading guidelines are applicable for today. Those balance trade guidelines are as follows. If the market opens and remains within balance, all it's doing is further defining or tightening the balance. The rest of the guidelines go with a breakout from balance. So if there's anything big on the upside, we will trade above the 2 days. If there's anything big on the downside, we will trade below the 2 days and start to show more extension to the downside. If you have a 2-day balance and you look outside of balance and then come back in, the destination trade becomes, and I'm talking about the potential, so if it looked below and comes back in, the potential is for the market to trade to the opposite extreme of the balance. But the big thing today is that the market is within short-term balance. If there's anything major happening today, we will trade outside of that 2-day balance. The next thing I want to focus on is overnight, and Jen, let's go back to your live profile again, if you would, please. The next thing is that overnight inventory is short. And if you'll mark the settle, we measure overnight inventory from the settle. Any trading that takes place below the settle is considered short. There's about a 70% probability that there will be a counter auction or a correction relative to overnight inventory. So the counter auction or correction to overnight inventory today would be for the market to rally. The 30% of the time, it's a ballpark average, but about 30% of the time, if you don't get a counter auction or a meaningful counter auction to overnight inventory, and in this case, that would be a sign of weakness. Usually, if you do not get a correction to overnight inventory, and in this case, if the overnight inventory is short and you do not get a counter auction to that short inventory, it usually would be a pretty big day on the downside. The same thing would be if the overnight inventory was long and you didn't get a counter auction. It's usually a pretty decent day to the upside. Now, that's just kind of how we look for short-term trading. But also, as I've said so often, we don't trade in a vacuum. There's a couple of things out there that have got my attention. A lot of times in trading, you'll hear the word contagion. And contagion just means that, some hiccup starts in the financial markets somewhere and it spreads. There has been substantial weakness in China. And I think there's a potential for, and I'm not making a prediction, but I think there's a potential for some contagion relative to what is going on in China. It's a big market, second only to the U.S. economy, and it's applicable throughout the world. So it's just something to keep in mind. Next, we've seen the earnings reports, and on the surface, the earnings reports have been have been that, most of the, or I think it was like 80% of the reporting beat the estimates. However, when you take a look, those estimates have been cranked down, so beating the estimates isn't such a big thing. When you look overall, there's been quite a deterioration in earnings, and they still seem to be deteriorating when you look going forward. Now, I'm saying that because we're not fundamentalists. That's not what we do. But as I said, we don't live and we don't trade in a vacuum. So the last thing I'm looking at in here is that, it's just been magical 4,600. And you see right now the market's still trading at 4,600. So that's another, one of those references that the short-term traders have been going by. So netting out what I'm talking about as we line up for this morning, we have the first time in 13 days, this will be the 14th day, that the market is going to open, unless something really drastic happens in the next couple of minutes, the market is going to open below the trend line. I think the odds of that bringing in some liquidation are pretty heavy, but that's one. And remember, trading is about change. So that would be an indication of potential change. The 4,600 level is getting focus in here. And next we have a 2-day balance. Now, if you notice, overnight, we traded down to just about yesterday's low. So Jen, if you can pull yours up so we can see the low from overnight and yesterday's low. So as of right now, we will open in the next few minutes here within the 2-day balance. So opening within the 2-day balance adds another element. So there's no real change relative to the last couple of days. All right. So an overnight inventory is short. The odds are about 70% you get a counter auction relative to overnight inventory. If you don't get that counter auction, that would be an indication of further weakness. You do get the counter auction, it takes you back up, and it keeps you well within the 2-day balance. All right, Jen, let's take some questions. I'm sure there's a few of them out there. Jen, are you there?
Yeah, sorry, my mic was on mute. The present auction in the ES does not have much material excess. Since this rally has been quite large, would the odds favor more excess?
It's a great question. There is no meaningful excess at the high. One of the nuances that goes along with trading is sometimes what doesn't happen can be more important than what does happen. Sometimes when there's no excess, it's because, if this is excess on the high, it's because inventory has gotten too long. And we have a thing in trading, sometimes the market has to break before it can rally. If it's too short, sometimes the market has to rally before it can break. So you've picked out, you're correct in what you say, but it's only one of many, many factors. And I've been watching that, and the March 22 high and last month's high are, within a few ticks of each other. But it may be, you always have to understand the potential. The potential is that the market's gotten too long, and we showed the line, the trend line, and I'm saying pretty good odds that is very short term, or the laggard traders. Laggard traders are the weakest of traders. So your observation is correct, but remember, it's only one data point. And one of the things you're always trying to say is what else could be going on? And it could easily be that markets have gotten too long to go any higher, and sometimes they have to break before they can rally. Okay, next question.
Okay, we have a recent high in the overnight session on the 26th, which did not get taken out during regular trading hours. So is that information that you're carrying forward?
Yes, it definitely is. As I've said many times, it is unusual for a rally high or a rally low made in the electronic market to be lasting. However, it doesn't mean I've seen them last for, days and weeks. So again, sometimes it's a time frame, and it still may go back to the point that sometimes you need to break before you can rally. I mean, there are no exact answers to this market. But again, if anybody that's followed me knows that I don't like markets that the rally high is made in the electronic, nor do I like rally or break lows. But that doesn't mean that they can't exist for some period of time. Okay, another question.
Would you consider the single prints low, from the NQ here to be from Friday as excess, although it happened inside the previous day's range?
Yes, yeah, I think that's fair. Yeah, and you got, it's you can take that and you can, take the NQ, and that can also be a short-term balance, very similar to what we're dealing with in the ES. Okay.
Okay. So somebody's asking, I think with regards to the primer, because that's what starts tomorrow, and they're asking which book or books from the book list should I buy to supplement the teaching that you're starting on the 2nd, meaning tomorrow, the primer?
Good. I talked to somebody last night, and I think I gave the name of the book wrong. It's Gut Instinct, right? Jen?
I thought it was Gut Feelings.
Okay, double check, make sure I get the
Hold
name
on,
right.
it's Gut Feelings, the intelligence of the unconscious.
That is, anyone should read that book. What it really is, it
But
talks.
Jim, I just wanted to clarify, like I said, they're talking about the primer versus the intensive. So for those of you that are going to be joining us for the intensive, Jim in our last webinar revealed that we will be covering Daniel Goleman's, here, let me bring it up here. This is better. If you go to our website, resources, books, you can find this list here of the books that we recommend. But Jim will be covering Daniel Goleman's Emotional Intelligence and why it can matter more than IQ, along with, where's gut feelings, right?
I think it's a yellow book.
Yeah, right here. Gut feelings, the intelligence of the unconscious.
Okay. And the reason that I emphasize that so much is our intuition, our brains have so much power, but a lot of times we don't understand that. And gut feelings does a really great job of laying out the place that intuition plays in what we do, whether we're driving a car, whether we're playing baseball, whether we're trading. Your gut instincts don't get honed well without experience. But as you do trade, if you understand how instincts develop and get honed, it will help you tremendously in there. So anyhow, no matter whether you attend our courses or don't attend our courses, I think it's just a great book to read. Okay. Another question.
Okay, you say that preciseness is detrimental on entries. Do you mean this preciseness takes focus away from evaluating all the data points as a whole to enter a trade?
What I say is really exactness kills. So many times there are so many things going on, and trading takes an awful lot of energy. There's an awful lot of different probabilities and possibilities going on all the time. People get focused too hard on one little entry and exit point, and that can blind out the larger picture. Almost all of my entries in the market are market orders, because I'm looking, if I'm going to do something, I'm going to do it. I'm not one tick or another isn't going to make a difference on what I do. If I look at the market and I want to be long, I'm going to go long. If I want to go short, I'm going to short. Now I may wait until the market, gets the momentum, or tempo slows down. I may do things like that, but usually when I go, I hit market. One of the things that I've been trading a lot lately, I've been trading the SPY options a lot. And one of the reasons I've been trading the SPYs more than anything else is that the market itself is so deep that I don't worry about entering orders. I don't worry about getting ripped off. When I'm trading futures options or other options, sometimes you got to be pretty careful on the entry, because the spreads between the bid and the offer can be pretty wide. It can change very quickly. The depth of the SPY I have found to take a lot of pressure away from me. If I want to be long or short, I just go market, and that takes another thought away from me. Okay, another question.
Okay, somebody's asking, could you look at Thursday's ES high? How many single prints are required to be meaningful excess?
That's an interesting question, but it's focused too much. I mean, it takes two, but I don't know what meaningful is. I mean, I look from over a time with experience, but I relate it. If you look at it that way, it looks one way. But when you look at the bar chart and you see how close the March 22 high and the August high are, if you look at the monthly bar, all of a sudden you get a different perspective from it. All right, final question before I turn it over to Jen.
Okay. Usually in the summers, you mentioned that the market slows down this time of year because junior people are working the markets, or other more senior traders are on vacation. Do you see things are different this year?
One of the things you need, I tell the story. I used to be in business with a very large trader, had 57 telephone numbers they could be reached at any place in the world. They'd be in their Falcon jet in Europe, or they could be at the beach. Real traders, if there's something going on, can be reached at any time. Yes, there are more holidays, there's more vacations and things, but if there's really something meaningful in the market, the real traders will come out. All right, I'm going to sign off because I've got some things I've got to do on the opening. Jen is going to take questions for people that have questions about the educational
Yeah,
programs.
if there's anybody that has questions, like, because maybe you haven't done an intensive with us before, or you have specific questions to that, I don't mind taking a few minutes right now just to answer those questions, so that you've got those answers, and you can decide if that's something that you want to do. But right now, we still, on our website, if you go to jimdeltontrading.com and courses at the top navigation, the primer is still featured there because that's starting tomorrow. And the intensive, which we just announced, that's going to be running from October 4th to November 2nd, is posted on our courses page, but you got to scroll down for it. So if you're looking for specific information on the intensive, you need to scroll down on the courses page and then go to view detail. And you'll notice here that we also have a schedule posted so that you know the timings of the webinar. They are listed in Eastern time, so you'll need to adjust for your time zone. But as you have heard Jim mention before, if you want to join us for the live fall intensive, you do need to complete the prerequisite requirement, which is the foundation and application of the market profile e-course. And right now we do have bundles, so that if you're interested in purchasing more than one course, you can get a nice discount. We also have the early bird pricing right now for the intensive. So purchasing early is always going to yield you the best price. But you'll see here that we have the bundle that includes both the foundation e-course and the intensive. So obviously, if you got this around this time, hopefully you've got enough time to be prepared come October. Do the foundation e-course. It's an online at your own pace e-course that you have to go through more than one time. Repetition is key whenever you're learning something new, or even if you're familiar. There's a lot jam-packed into the foundation e-course, and so we always say, hey, please make sure you go through it multiple times. Something that we offer specifically with the foundation e-course is a one-time web session meeting to go through all the questions that you have. We just ask that you go through it, have a good grasping overall of the material, and make your list of questions and come back to ask those questions in that session so that we can go through it efficiently. But we understand that you may not be ready to take an intensive right now, but you're interested in getting started and doing the foundation e-course and are concerned about, well, what if I have questions? Well, that's why we offer that one-time web session meeting with regards to that. Somebody's asking about how long do you have access for. With our e-courses, you get access to any e-course that you purchase from us. You get access for 3 years from data purchase. And if during that time we add any lessons, you will get access to those lessons during that 3-year period of time. And we have added lessons in the past. And I would think that for the foundation e-course as well, at some point we will add a lesson for that. For the intensive, because it's so webinar heavy, you get access to the materials for 1 year after it finishes. So if you are somebody who's thinking about the live intensive, yes, all of the webinars are recorded. You will get access to the materials of the intensive that you purchase for a year after, so that you've got enough time to go through and review everything. Somebody's asking during the time of, I'm not sure what you mean, that period, do we get Jim's daily report or brief? No, for our e-courses, no. So the daily reports are something that we only offer when we're in a live course. So for example, if you're in the primer that starts tomorrow, the latter 4 days is when we're covering and narrating the market. So we will provide reports during that time. For the intensive, throughout the intensive, if you join us for that, then yes, you will get access to reports, every day of the intensive. But it's not it's not a separate service that we offer. We only really provide live reports, or daily reports, sorry, during our live programs. Okay. Okay. Well, if you guys have any additional questions, want to figure out what's right for you, you can contact us at the number at the bottom of our website and be happy to speak with you, or you can shoot us an email at dalton@jimdaltontrading.com. Thank you. People saying hello, our regulars. Thank you for being here today. And I'd be happy to speak with you. Just to make one thing clear, because I've already had several inquiries about people who have taken training elsewhere and want to do the live intensive and are asking if they can bypass having the prerequisite requirement of the foundation e-course. No, we do not allow that. It's for a reason. In the past, we didn't used to have the prerequisite requirement, and people would come into the intensive and then ask all sorts of newbie type questions or repetitive green, type questions. And so it really took away from the other people there who already have the foundational knowledge that we expect them to have coming into a live intensive. And so we had to make the decision in order to keep the integrity of the intensives. That's why we had that prerequisite. So I apologize for the inconvenience if you have taken training elsewhere and are thinking that you should be qualified to take the live intensive. Unfortunately, that's not the case. There is only one exception where you would be able to take the intensive having not had the foundation e-course before, and that would be if you are somebody who has taken a live intensive, a full one in the past, and we can verify that, then you would be grandfathered in to be able to take a live intensive with us. So if you are somebody who's an old client, has taken a full live intensive in the past, and are considering taking this one, and you'd like to check if you're eligible, you can shoot me an email or give me a call, and we can figure that out. Okay? Okay, well, thank you so much, everybody, and have a great rest of your day. hope you'll consider joining us for a program. Thanks. Bye.